Good afternoon and welcome to today's FS Club webinar, Intelligent Money, Our Future is Where We Do Not Think About Money as Our Money Thinks for Us, which sounds fantastic to me and is the title of Chris Skinner's new book. The book argues that by 2030, digital money will individualise currency and its usage, making it secure and enabling automatic growth and risk management, thus making life simpler and easier for all. Now, it is my pleasure to welcome Chris Skinner, who doesn't really need an introduction in the FS Club world or financial services in general. But for those who don't know, Chris is one of the most influential people in technology and finance. He is an independent commentator on financial markets and fintech via his blog, thefinancier.com, which we will link to in the chat. He also helped found one of the first mobile banks in the world and is a visiting lecturer with Cambridge University, as well as a TEDx speaker, and a non-executive director and on the advisory boards of many fintech and financial firms. And of course, he is a best-selling author, and I will shortly hand over to Chris to discuss his latest book with us. But firstly, some brief housekeeping. If we haven't met yet, or virtually or in person, I'm Charlotte Dalbrashley, and I manage the FS Club here at ZN. And I'd like to warmly acknowledge our very generous sponsors who enable us to continue to bring you a wide range of thought-provoking content across finance, economics, and technology. The session will be recorded and available to watch on our website within 48 hours, and we'll be holding a 20-minute Q&A session after Chris's presentation. So please use the GoToWebinar chat facility to send your questions in to me, and then I'll feed them into the conversation. Now, without any further ado, it's over to you, Chris.
Thank you, Charlotte, and hello everyone. Trust that you're having a good day. It's about to get a lot worse, mainly because I'm going to be telling you what's coming down in the future. Actually, for me, a lot of it is very positive, but I've written about the future of technology and finance for most of my life, and particularly a number of books, as you can see here, the first of which was the bottom middle one that came out in 2007. And the bottom left, as I look at the screen, Intelligent Money is the newest one coming out this month. It's not available quite yet. And it's all about how the world will look in payments, finance, technology over the next decade. And a lot of it is positive. In fact, every morning when I wake up, I ask myself one question. What's the future? Where are we going? What's coming next? What is the thing that we need to think about 5 or 10 years from now? And the reason why I think that is obviously because it's the only thing we can deal with and change. We can't change yesterday or today. We can only change tomorrow. So what's the future is a really important question. And to understand the future, there's a number of techniques which primarily are based around a model of forces of change, which are summarized as pests, which is very appropriate: political, economic, social, and technological. So I'm going to talk about that and about the impact that the future forces have on banking, and then the world of the future, the bank of the future. The political, economic, social, technological factors, the pests, are very difficult to predict. We couldn't have predicted a lot of things that have happened politically and economically, for example, such as the pandemic, the vote for Brexit, the likelihood of a Taiwanese-China war, the fact that we have a Ukraine, Russia, and Palestine-Israel war. Some of those things are more predictable than others, but there's always something left field, like a president who suddenly voted into office that no one thought would be voted into office, and a resultant economic crisis for everyone in the world because of the lack of access to raw materials and the supply chain. So the black swans of the political and economic sector are things I don't deal with. I do commentate on them. I write a blog every single day at thefinancier.com, but I focus much more on technology and how technology is driving change in society and the economy and commerce. And that's where I come from. I specifically look at technology in the context of finance and banking, because that's my specialist area. So I'm not a futurist, I'm a commercial strategist dealing with technology companies and banks and trying to see where there's opportunities. Right now, there's huge technological changes taking place. We have 6G, and just when you thought 5G was here, 6G is developing. There's the metaverse, and whatever that means, we don't know yet. There's artificial intelligence, which I will talk about in some depth, but equally, quantum computing. No one really understands it. I mean, if you haven't studied it, you probably won't know that it's based on Schrodinger's cat, and that's a scientific exercise to work out whether the cat is dead or alive. Google it, you'll realize how confusing it all is. And also financially, there's a whole range of things happening that are equally disturbing, such as cryptocurrency, central bank digital currencies, the blockchain, centralized finance, decentralized finance, hybrid finance, which I call hi-fi. It kind of raises many, 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 many questions. And when I started this new book, Intelligent Money, I sat down and I said, well, there's two big questions in my own head, which I need to try and answer. The first is, for 10 years, I've been arguing with libertarians that you cannot have decentralized finance because you can only have finance with government. And I got into a lot of arguments with them because they accused me of being a statist, as in a government aficionado official, which is what centralized finance, central banking, and commercial banks is all about. And I said, no, I'm not. I'm just saying, what is the government of decentralized finance? And the answer is the network of the people. Is the network of the people who manage the cryptocurrencies more trustworthy than a central government who issues fiat currency or central bank digital currencies? That's a big question. And then the other question was, when we've got ChatGPT and AI and everything happening around generative AI, what does generative finance look like? And how does that change the game? If you put AI into everyday payments and finance and services, does that make it better, or what regulations are needed? So those are really the two themes that I'm going to explore in this discussion, because if we use AI correctly, then money can think for us so that we don't have to think about money. And equally, we could have a map of decentralized and centralized currencies based on our beliefs, whether we would believe more in the network of the people or in the governments of our countries. Kind of fundamental questions. If you haven't looked at ChatGPT, it's quite interesting about how it arrived, because I've been talking about artificial intelligence since the 1990s with neural networking, paired trading, algorithmic trading in the investment markets of the city. And it's come a long way. Having said that, it's still got a long way to go in that, it's only just still broken through, but has some naiveties. As you'll know, if you've used it, sometimes ChatGPT and the other services get the facts wrong. But behind ChatGPT was quite interesting because it's actually the libertarians like Peter Thiel, the founders of PayPal, Elon Musk, Reid Hoffman, the people who are behind the breakthrough disruptive fintechs and financial service companies of today, as well as SpaceX and others like Tesla, if you focus on Elon. So the background is interesting, and it's married between the new tech companies and the old tech companies like Microsoft. And I say old tech because, they're pretty old. I started talking a lot about how AI was breaking through into finance because there was a great headline 7 years ago about how JP Morgan had got rid of 1,500 lawyers by using AI to do their work in a second. And basically what it was doing is checking contract wording. And when you look at that, commercial contracts, incredibly complex. Why do you have humans doing the wording when it could be automated? It's the same as, why do you have relationship managers and UBS administering emails from high net worth clients when a robot could do that for them, which is eventually what UBS did with AI. There's been AI in lots of examples for quite a long time. In fact, my favorite picture is this one, which is the Connecticut trading room of UBS in 2007 compared to 2017. That's what automation does. That's what AI does. It gets rid of jobs, but it gets rid of mundane jobs like checking words on contracts or administering high net worth client emails. And where we're going is a new world of new jobs, which is training the machines, explaining what the machines are doing, and sustaining the machines and making sure they're doing it correctly. And this is going to be a key role for humans, because you can't just let the machine run itself. Otherwise, it becomes cyberdyne. It gets worrying. Or does it? Maybe we fall in love with our machines, like Joaquin Phoenix did with Scarlett Johansson's voice in Her. And if you haven't seen that film, it's a great film, by the way. Equally, talking of films, you probably recognize this guy. What happens when you have a holistic view of the customer in real time? I know who you are, I know where you are, I know how you are, and I know what you're doing. That needs to be regulated. That needs to be controlled. Because right now, as I say, the AI systems are quite naive. For example, I asked an AI and a visualization system to give me a picture of an eggplant, and this is what it gave me. Give me a picture of a butterfly. Duh. Not quite working quite yet. But there are a lot of technologies that are coming together to create a whole new world that's augmented and intelligent. And for finance, I keep saying, and that's the theme and thrust of this presentation and the book, that financial services, and specifically payments, become embedded, invisible, intelligent, and everywhere. And that's what these converging technologies provide. And then you wrap all that together into the augmented world of virtual realities, and you have the metaverse, which is kind of here, but it's still got a long way to go, as Mark Zuckerberg could tell you with his failed billions of dollars invested in Meta, or the metaverse to be exact. The reason why Mark Zuckerberg believes in the metaverse, as do most people, is that it will happen. It's just when. When you think about gaming, for example, gaming is a bigger industry than Hollywood and the music industry combined in terms of revenues and profits. That's the reason why everyone is focused on the metaverse. If you have children, and I've got children 8 years old, they love Roblox and Minecraft. These are billion-dollar plus companies just in their own right on those platforms. You bring all those together and you kind of wonder, so what does gaming, artificial intelligence, and the metaverse mean for banking and finance? And I think I have an answer, because I was dealing with this 20 years ago. And the reason why I was dealing with it is that Second Life was a virtual reality that became a big thing in everyone who was working on the internet. You may remember it, but if you don't, the whole idea is to create an avatar of yourself and mix with people in a virtual world. And the headlines were mainly around the fact that it was creating a new virtual commerce system that was a virtual reality, distinctive from our own realities. Just to show you, because it shows it's 2007, this was me on the left, Spiny Norman. I've no idea why I'm a girl, actually, but on the internet, no one knows you're a girl or a dog or whatever you are. And the big thing that happened is that in 2006, Ansh Chung, who's a Chinese German, made $1 million on property that doesn't exist. And so everyone got excited. ING created a virtual Amsterdam in Second Life. A lot of banks were starting to do interviews virtually through Second Life avatars. It became a major sort of bandwagon trend. And one of the key things that happened, and this is a big learning for me, and if you didn't have an understanding of this for you, because this is what's going to be the core of the metaverse virtual worlds of tomorrow, is they had a bank. It's called Ginkgo Bank. It was the biggest bank in Second Life. And to get your virtual goods in the virtual world, you had to buy Linden dollars with real US dollars. So people would go to Ginkgo Bank, and for every dollar you put in Ginkgo Bank, you get 27 virtual dollars back. And so within a few months, Ginkgo Bank had 1.5 million real US dollars, having issued over 30 million Linden Labs dollars. Linden Labs is the company that runs Second Life. And then overnight, one day, Ginkgo Bank disappeared, shut down, switched off, deleted. people were angry. And in fact, they demonstrated for 3 months virtually outside the head office virtual organization, Linden Labs, saying, give us our money back. And Linden Labs said, it's not our job to regulate these people. And eventually they said, well, actually, it is our job to regulate these people. And so they said, to be a bank in a virtual world of Second Life, you've got to be a bank licensed in the real world of Earth. And to me, that is the key learning, that we will see more banks in virtual worlds offering banking services, and they have to have bank licenses issued in the real world. And this demonstrates the way in which the world is moving, in that Bill Gates made a rather naive statement back in 1997, we need banking, but we don't need banks anymore. What he was getting at is we don't need banks to do payments, investments, savings, credit, lending, mortgages, etc. But the bottom line is, if you're a deposit-taking institution offering cross-border services, you have to have a banking license, because only banks can do banking, because it's all about the trust in the banking license and the deposit guarantee schemes behind that license. If you've dealt in cryptocurrencies, you'll know what I mean, because I've lost lots of money in crypto through dodgy schemes and scams, as have many people in the world. I won't go through all that now. The problem banks have is that they've been around for centuries, and if only banks can do banking, they now have to do it digitally, which means to reinvent the bank from the ground up to be digital instead of physical. And we're getting there. You only have to look at the bank branch closures over the last 10 years. But to reinvent the bank is pretty hard. And now we have these new forces of change, which is decentralized versus centralized currencies and artificial intelligence. So when I look at artificial intelligence, there's a whole range of ways in which I see that changing banking. And there are specific use cases. Most of them at the moment are used around fraud and risk, which is where banks typically start rather than customer enrichment. But there's going to be a battleground around how do you offer the best customer experience? How do you ensure minimal risk? And a great example of a company that does that is a company, for example, like Alipay in China, where for every $10 million spent, there's actually virtually just 0.06 basis points of fraud compared to 1 to 3% in most Western banks. It's a whole new financial market based on networks, digital currencies, artificial intelligence, mobile, and cloud. I'm missing cloud on there. And that's why Fintech has taken off. Fintech has become a hotbed of innovation, because what they're doing is innovating bank processes using these tools of technology. And that's why there's been so much investment in fintechs over the last 15 years. In particular, between 2018 and 2021, we saw a massive rise of fintechs and fintech unicorns, of which I can name many, and so could you. But there's now over 350. It doubled the number of unicorns in just a couple of years. So it's not going away. In fact, the fintech industry in 2021 was valued as 38% of the value of the whole financial industry by market capitalization, whereas they were just 3% a decade before. And that's because they're automating specific processes across the value chain of financial services in a very specific way, one process at a time, using banking as a service, open APIs, and embedded software and apps. Every single part of the market is being disrupted by these new players. Now, you'll know this story. It's companies like Monzo, which I thought was interesting, that they just got a 9 million customer growth, which gave them a value of billions, compared to Lloyds and Barclays and NatWest. They're becoming one of the biggest banks in Britain, and that's just in 9 years since their launch. Pretty good, huh? Some people overstate this, however, because when you look at the assets under management, they're nowhere near companies like HSBC. So HSBC is still the biggest bank in Britain or the world, or amongst others, because I should say the American and Chinese banks have equally huge numbers of assets under management. But they're not competing really with the large banks that do commercial and investment operations. They're competing with the retail banks of Britain, and they're doing really well, as is Wise, which I use because I live in Poland. Wise now has 7.5 million customers, growing revenues 23% in the last year. Revolut, you'll know, is growing quickly. 40 million customers around the world and launching here, there, and everywhere. I thought it was interesting that Bunk, which is a bank that I know quite well in the Netherlands, is doing well. But they launched the other day a thing around the first AI bank in the world. And basically what you can do in Bunk, if you have their service, is find out answers to lots of questions, like how much did I spend in Amazon over the last year? Now you may think that's PFM. I would rather call it IFM. It's not personal financial management. It's intelligent financial management. It's where money thinks for you, so you don't have to think about money. And this is what all the fintech and challenger and neobanks are doing. That amazing growth of innovation in the last decade, 15 years, thanks to cloud and the smartphone. Those two technologies in particular were the breakthrough technologies in 2008, 2007, that has allowed the fintech community to really prosper with apps and APIs. I'll give you a last example. This is Nubank from South America, which is $5 for a customer acquisition is pretty much amazing compared to the $1,500 American banks spend generally on acquiring customers. But when you look at Singles Day, which is the November 11th, so marketing day for Chinese companies to sell as much as they can, a bit like sort of Black Friday, Cyber Monday in America with Amazon. It's incredible. Alipay, Alibaba sell like 100 million yuan on iPhones in a couple of seconds on Singles Day. They get $156 billion of sales in 24 hours. They deliver 97% of that in just 4 days because their logistics is incredible. I was in China, ordered something on a Saturday afternoon, arrived on a Sunday morning at my hotel. Couldn't believe it. They are processing 500,000 transactions a second, and in fact they're looking at now processing over a million transactions a second. They're going to double all these figures. They want 2 billion users on their platform before the end of this decade, and they're getting there. If you look at their processes, they're not just in China, they're across the whole of Asia. In fact, they're across the whole of the world. They've got partnerships across Europe. 6 of the biggest mobile wallets in Europe, from Nordic to Spain, run on Alipay technologies. Change is happening really quickly, driven by intelligent finance, intelligent money. In fact, it's becoming even more intelligent because of this guy, Vitalik Buterin with Ethereum. I truly believe smart contracts is going to transform all of the financial markets. And it's not about decentralized finance. It's about centralized finance using blockchain technologies intelligently as part of automation of their background processes and ledgers. It's not Bitcoin. A lot of people think Bitcoin's the thing. For me, Ethereum is the thing. Having said that, what's really interesting about Vitalik Buterin is he created Ethereum and its platform when he was 19 years old. Kids are creating the new world of financial services. Kids such as Kai Takanaka, who was 10 years old when she became the CEO of a blockchain company. Admittedly, her mum was heavily into blockchain, that helped. But, the standout teenagers for me were John and Patrick Collinson, who created Stripe in 2010 when they were 21 and 19 years old. Teenagers are creating the future of financial services. And when you look at the valuation of Stripe 5 years after launch, 9.2 billion, 400 people, it was doubling every couple of years. In fact, by 2021, it was more than doubling, it was tripling. So in 2021, I looked at the numbers and compared Stripe to the banks and found the banks were left wanting. Stripe was 9 Commerce banks. It was more than 3 Deutsche Banks in valuation. It was more than 2 BBVAs. It was just under 2 INGs. And this was just in a period of a decade that happened. And you look at the number of people, 4,000 in Stripe versus 57,000, 84,000, 123,000. Quite ridiculous. I often compared them with what's happening in Barclays, for example. I should be nice to Barclays because I'm presenting there next Tuesday evening, live and in person, the same presentation or something similar. But in October, a $30 billion valuation, so it's a third of Stripe's, with 130,000 people. 40 billion 2 years later, 83,000 people. Oh, that's interesting. And then 3 years later, it's gone up to 89,000 people. So I deal with these numbers often. I look at these numbers often and just compare what's going on in terms of the value per company and how they're growing or shrinking their numbers. And the numbers change all the time. These are the latest ones. So JP Morgan Chase has doubled its value in the last 8 years, but also increased their employee numbers by 70,000. In fact, a lot of those employees are embraced in artificial intelligence. JP Morgan now has 40,000 people dedicated to AI projects. And if you read Jamie Dimon's brand new shareholder letter, it came out just the other day, you'll see that AI is the big theme of Jamie Dimon's focus for the future. You'll probably get these slides afterwards, so I don't want to linger on the numbers there, but I will raise one problem, which is with all of this action and frenzy around technology and financial services and disruption and change and the fintech community and the new companies riding this wave, there's actually a problem because over the last 3 years, all the numbers have gone down. Going back to Stripe, their valuation went down to 50 billion. It's almost halved during the pandemic because everything came to a halt, except for the number of people working for the company, 7,000, now 8,000. There's been kind of a bloodbath, a shakeout, a lot of things changing, a lot of things challenging. And part of that is, did you really have the best idea? And is it sustainable? Stripe is one that is sustainable, along with Nubank, along with Monzo and Chime and others. But some seem a bit disillusioned. So GrabPay, for example, which is in Asia, had this great idea of launching a GrabPay service, but they spend $480 to get a customer who then spends $29 a year. That's not sustainable. So during the last 3 years, there's been quite a shakeout amongst VCs and private equity in how they see the fintech community. Alongside this trend, there's also been a big shakeout in banks of branches. So the branch numbers are going through the floor. I predicted that 20 years ago, 30 years ago. Main reason being is that what's a branch there for? It's not there to do transactions and it's not there to provide service. It's there to basically market the brand and to provide trust. That's what branches are for these days. They're not there for anything other than trust. Show me the money. I can walk in, I can see the money. But what money? Because no one uses cash anymore. Cash is going away. Again, it was promoted actively because of the pandemic, and the trend is showing that people are now happy using contactless. And I was with a meeting of UK Treasury recently, and they said to me, "What's your vision of payments?" And I said, "Well, where I don't have to do anything other than wink." If you know FacePay, you'll know what I mean. Similarly, when I talk about Bitcoin, I find it interesting because for most of the last decade, everyone said it's completely useless and no one believed in it, particularly banking people didn't believe in it. But when we look at the future, I think Bitcoin is going to play quite a strong part in the future, along with other cryptocurrencies, of which there are over 2,000. So don't think it's just Bitcoin and Ethereum. You've got Polygon, Cardano, Dogecoin, you name it, there's a coin for it. And the reason why I believe that this is critical is that the reason why people don't want fiat currencies is because they're controlled by governments and central banks. But the internet doesn't recognize governments and central banks. It doesn't recognize countries. It doesn't recognize borders. It's a globally connected community of anybody who wants to trade and transact. And Jamie Dimon spent most of the last decade saying that Bitcoin was a scam, it's useless, you'll lose your money. Well, I call him the Diamond Saw, because now it's interesting, JP Morgan Chase offers electronically traded funds regulated by the SEC, and ability to trade on those funds through their platforms using partners. So he was wrong, because money doesn't actually exist. We just invented it. If I said to you tomorrow, the British pound that you have in your pocket today, or £5, £10, £20, is now going to be a glob. If I said that as the British government, the Prime Minister, you'd say, okay, I'll have a glob. I'm not bothered about a pound. Times are changing very quickly. And so when I look at the bank of the future, and this is where I'm going to finish, I think that it will always be a role for a bank, because a bank has to be regulated and have a license to be trusted with insurance compensation scheme behind it. Otherwise, it's just the Wild West, which is why I started when I was talking about Second Life. And equally, I could talk about Mt. Gox or Quadrango or FTX or any of the cryptocurrency platforms, bearing in mind they're not the currencies, they're the exchange platforms. So the bank platform will become a digital asset manager. We talk a lot about physical assets. What about digital assets? We're going to focus on those. That's going to be a big change. We're going to become data stores of value, and the cloud-based bank data centers will be ones where trust and security will be top of mind. Who else would you trust more than a bank with your store of value? And you may say Apple, because Apple's making a play in this space. What's Apple's telephone number? How do you get hold of Apple if you've lost your money? How do you get the money back if they've lost your money? What's the regulatory scheme behind Apple and Apple Pay? Just saying. Apply that to Google and others. Another thing will be banks of the future will be life event managers. They're already working on this quite extensively. But when you think about births, deaths, marriages, redundancies, car crashes, this will be where the link of APIs across platforms will become a critical differentiator. In fact, I met one bank that said they're specifically focusing, for example, on insurance and saying, if you have a crash, you just get out of your car, assuming that you still can. If you can't, the hospital ambulance will arrive anyway. And they manage the whole thing for you as an event, as a life event. They call the tow truck, they get you a taxi, they get you to the hospital, they manage the whole reimbursement, they get you a hire car. It's all automatic, because the car's told them through the APIs that you had an accident. You don't have to do anything, because money thinks for you, so you don't have to think about money. To do that, we need to think different. We need to think in real time. Real-time insurance is a big thing of mine, where rather than annual policies, I can just insure my laptop for the next 6 hours. And you can do that through a number of different providers these days. Lemonade is a leading new innovator in fintech and insurance, who actually do real-time claims processing. So you get your money back if you lost something within seconds, based on their risk analytics algorithms in their intelligent systems. So the intelligent financial service of the future is real-time life events that you can trust to store your data and value with, because they're regulated and licensed, but critically curates an ecosystem across the world of the best partners they can find to deliver the best customer experience. Those are kind of all the themes that I explore in Intelligent Money. I hope that this has given you a taste and a flavour of what it's all about. You can order it from April 17 on most good bookstores. And if you can't find it, you can ping me, and you can find all my details at all these websites, because I'm the fintech guy who's a troublemaker at thefinance.com. Thanks very much.
Thanks very much, Chris. We've put the link to where you'll be able to purchase the book from the 17th of April in the chat box as well. Also a reminder that the recording will be sent to everyone within 48 hours and also available on our website and YouTube channel. Moving on to questions. So Clive Bullen has said, unfortunately, the bank Intelligent Finance, an offset bank, has closed all of its current accounts. Sorry, my computer just froze there. Do you think any of these new banks will do the same as Intelligent Finance used to and offset their cash holdings with debt and mortgages to save their customers on their interest payments?
Well, I'm not sure whether he's referring specifically to Intelligent Finance, which was a bank launched 20 years ago by Halifax. And the problem with that bank was that they talked in bank language terms about jam jars, and the process of entering the bank, dealing with the bank online, was actually very, very difficult. And it's funny because when I called the new book Intelligent Money, I thought, I bet people will go, oh, I remember Intelligent Finance. The reason why it closed is it wasn't actually the right timing. And a lot of what I say about PEST, political, economic, social, technological change, is it's got to be of its right time. So we've known for ages that biometrics will be something important in financial services, but it wasn't until Face ID and Finger ID came along with smartphones that you could really integrate that into the process. And the same is true pretty much of intelligent finance, that it was a good idea before its time, executed badly, shut down for that reason. And I would say today's versions of intelligent finance are companies like Monzo and Revolut and N26 and Bunk and Chime and Nubank. I can go through the whole list. Sorry, I missed out Starling. How can I miss out Starling? You've got to have the right tools and technologies to build the right bank at the right time. And intelligent finance was just built before its time.
Thank you. Now, Michael has said banking is predicted to lose the most jobs in the near future due to AI. So AI will be carrying out the most mundane jobs, and most people in a company start at the bottom and work up, gaining experience. So how will they do this in the future, and how will the business work?
Well, John Crane, he was the CEO of Deutsche Bank in 2017, gave a presentation at a Handelsblatt conference that I also presented at. And said the problem we have is that most of the people in our back office are just calculators and numbers people, and we won't need them. But I heard that 20 years before in an insurance company that I was consulting with, who said most of the people that we have in our company are just box tickers and button pushers. And everything that can be automated will be automated, like the 1,500 lawyers in JP Morgan Chase who are checking words on contracts. You don't need that sort of job. So what's the jobs going to be? Well, I mentioned trainers, maintainers, and explainers of the machines. But more than that, some time ago, I was thinking it's all about emotions and relationships. And you can have machines managing relationships. In fact, it was quite interesting that they recently had a test where a machine was given a case of patients in a hospital and gave a much more empathetic and detailed answer to their questions than doctors did, because doctors were too busy. So maybe the machines can be better at relationships. I think the bottom line is, if you're investing in your kids today, what are you investing in their education? I've just actually been to my children's school today, and my boys are 8 years old, just to let you know that I wasn't just there sort of being weird. So, my kids, they were showing me their writing, maths, reading abilities. And I think those are the basics you have to have, but I would rather nurture their relationship capabilities, their emotional capabilities, their creative capabilities. And the one thing you have to bear in mind with AI is it's only as good as what humans put into the system. So I went on ChatGPT recently and said, write a update essay about what is fintech in the style of Chris Skinner. And it wrote a really good summary of fintech in my style. And I'm like, because it just scraped it off the financer.com. It's got no brain, it's got no intelligence, it's artificial, and it's only as good as what humans put into it. And in fact, the other thing I keep writing is, the world could go into a machine-to-machine world that needs no humans in the future, except that we will always, I hope, program an off button.
I also hope so. Now, Trevor has said he understands why Ethereum is significant, but why is Bitcoin?
Well, the thing about Bitcoin is that it was launched with a libertarian view of the world. And when you say libertarian, you kind of go, who are those people? Well, they're people like Mark Zuckerberg and Peter Thiel, the people behind ChatGPT, Elon Musk. These are people who do not believe in the control of the national governments. They believe in the power of the people on the network. And they're very influential people, as you know from the names I just mentioned. And the Bitcoin importance is therefore around that fact that it's out there in the wild, not regulated, cannot be regulated in my view, because it's already unleashed and has a lot of powerful people who are invested, like the Winklevoss brothers, for example. And now the SEC, the FCA, and others are saying that the cryptocurrencies like Bitcoin can be traded on regulated markets in a regulated structure. And this is one of the big themes of the book, along with AI, the friction between centralized versus decentralized. My view is that I would never but trust a decentralized, unregulated marketplace, but I would trust a decentralized, regulated marketplace. I just don't know what it looks like. Is it regulated by the government or the network of the people? And I still haven't answered that question.
Interesting. Jonathan has asked, should we be getting the practical elements, giving the practical elements, I should say, of this over to young adults entering the workplace, earning their first salaries? And if so, how?
Well, there's 3 or 4 other things that I didn't get into in fintech, but there's a lot of innovation around financial inclusion and diversity and literacy. And financial literacy, I think, is one of the poorest areas of education in schools. And that's where it should start. At what age? It's interesting, actually, because my boys are learning some aspects of financial literacy already in their grade 1, grade 2 classes. So maybe it's just the school that they're going to. But I see an awful lot of schools have people, at 16 or 18 leaving with little knowledge of bank accounts and money. And the worst part of that is that you end up looking at money as just a game in an app because you've never actually seen money. And that's where we are currently going. I often commented that, Jerome Kerviel and a number of the other traders in the investment markets were treating investing almost as though it was like Space Invaders. It's a game, and these are not games, guys. It's real transactions, real money moving across borders and between institutions. So I think financial literacy is the main priority I'd have, and it should start in grade 1, grade 2. Early days.
Mm. And I think in terms of children learning about that, they do need, it's so much easier if you've got physical currency to demonstrate rather than it
Yep.
just being online and virtual. I think we've got time for one last question. Um, so Dan has asked if you could talk briefly about meme coins, either use case or utility.
Well, there's a number of meme coins that are currently growing in the markets around the world. I guess Dogecoin or Doggy Coin, or Dodgy Coin, or whatever it was one of the first. But now there are many. If I'm honest, I don't really trade or experiment with them very much. In that, I think these, a little bit like NFTs and other things, are of a moment, experimental, and they get a lot of interest, and then the interest dies away and they disappear and fade. Like, when was the last time you bought an NFT, and why?
Good point. Um, that brings us to time. I got a lot of comments in the chat saying thanks for an excellent, interesting talk. And don't forget to follow the link for the book, and obviously also to the blog that comes out weekly, thefinancier.com. And
Daily.
also thank you, daily, I should say. Sorry,
Daily.
gosh,
Every single
that's
day.
impressive.
Every single
That
day for
is very
17
impressive.
years.
Well done. And yes, thanks again very much, Chris, for sharing your work with us today, and also our sponsors for making these webinars possible, and also for everyone, of course, for logging in and contributing to the discussion. We've got plenty more webinars coming up over the week, including our Knowledge Miles series. So thanks, everyone, and have a great week. Goodbye.